It goes, uh, how you guys doing? Have you ever got into a trade, right? And when you're in this trade, you paper hand, right? You're like, oh, I took 60% profit, and you paper handed, and it went like 100, 200, 300%. And you're like, oh man, I didn't hold it that long, and I only made 60%. And you're sad, you got little tears coming out, and you're like, this was the chance to get my 100, 200%. Well, when you got into a play, did you know where you wanted to get out? I said that last time. I said it on Monday. So today, I'll give you an example. I got into a play. I'm not gonna lie, I do it all the time. I got into a play. It was on the QQQs. I got into a call play like right after 10:30 or whatnot, and it goes up. And I'm like, oh, it goes up. I'm out. I'm out 20%. I, take a couple contracts out. 40%, take a couple more contracts out. By the time it got to 80%, I was like, oh, I'm all out. I made my money. I'm great. The play ended up going to like almost 150 to 200%. And you're just like, oh, crap. Right. I could have held. I could have. That's the mentality that we have. Right. I could have. And just as quick as you could have made those profits, is as quick as you can lose those profits, right? That's the most important thing that I want you guys to really, really know. Is just, it's phenomenal to me how, we can be so side-minded that we're like, okay, well, I could have got more, right? Because we always want more. Us humans, as naturally as we are, we want more. We're never satisfied, right? Even if you get 200%, you're not satisfied because you could have got 300%. Oh, you could have got 400%. But if you're satisfied with the profits that you're making, that's the most important thing, right? So that's what I want to really talk to you about, because I got into my play, and when I paper hand a lot. I'm not going to lie. It happens quite a lot. Yeah, it happened yesterday. Definitely happened yesterday. I think it happened yesterday. I believe so. Yeah. Okay. Anyways, yeah, it happened yesterday, right? And it happened the day before, and the prior day before, right? So every single day I paper hand. It's just a natural thing, right? Now, if I decide that I want to just hold, right? If I just want to hold the position, 9 times out of 10, I'll go red, right? And like, you're like, okay, you know what happens to you. I'm watching you. You know what happens to you. You're in that play and it goes red. And then all the other plays that you are in, it goes green and you get out and it goes higher. I know you. I see you. Yep. Yep. That happens to me all the time. Right. So get into the play and you're red. All right. You take the L. Next thing you know, it just pops. That happened yesterday. QQQ puts. I send down an alert on our Discord, SOC. Let's grab puts. I believe it was like 358 or whatnot. Puts. It was dirt cheap, and I took a 15% loss because I said, like I'm going to take a 15 to 25% loss, and that's it. I took the loss, and then I got into another put play. I did get into another put play, but had I just held 5 more minutes, it would have been green, and then it tanked. Right, it went tank, and I got out. I got out of those puts probably around 100%. And that bad boy went to like 400%. So it happens. And I know that there are people out there or that are giving plays out there, right? And they say that, oh, yeah, I'm still in this play. Are you? Are you really still in this play? Are you? It makes you wonder sometimes. It's 400%, 500%. Oh, I'm still in this play. Oh, I'm out 1,000%. How do I know? How do I know that you know that I know that I know that you know that you weren't in that play? Or you were in the play and you got out early? How do I know? Right? And that is, it happens all the time. It happens all the time. So for you as a trader, what I really want you to focus on is be happy with what you get, right? Because, like I said, 30% of your trades that you make are L's, right? And those L's is what's going to dictate how you proceed in the future. So I'm going to go over the charts. Obviously, we're going to talk about SPY because I gave you guys a price action level on Monday, and I'm going to show you how it played out, right? So I didn't add anything extra to it because I wanted you guys to see precisely what I saw. And then we'll talk about the play that I got into, why I got into that play, why I exited that play, and why I could have got back into the play, but I didn't, right? And then I switched sides today. So I got into a put position, and then I got into a call position. My call position did go up nicely. I made 180%. However, we'll talk about that when that time comes, when I talk to you about that play. So what I'm going to do is I'm going to show you my chart. We're going to go into this chart. All right. So right now I have the QQQs up. This is on a 5-minute time frame. So when I'm in this QQQ play, I got into a QQQ play right about at this level right here. Let me show you. So after all this movement, right? After all this movement, I finally was able to look at the market, and I said, okay, what should I do here, right? So I'm looking at how the plays are playing out, and you start seeing that we're making higher highs and higher lows. And then this stage comes here, right? And I talked about this before. This is like that no trade zone, right? So I'm looking at that, and I'm like, okay, I noticed this doji candle that's sitting right in between right in between it. So I'm looking at this doji candle, and I'm like, okay, I'm going to try a put position, right? So this was a candle that I got into the put position, this green candle right here. So it was this red, it was this green. I didn't call it from here. I called it from here. So I got into this position right when it hit the bottom of that candle because I felt like, okay, we're going to go lower. I'm looking at these candles and it's going lower, right? So if I look at this green candle, it didn't go higher than this candle, it didn't go higher than this candle, it didn't go higher than this candle, right? And so I'm thinking about, okay, so I got into a play and I sent out the alert, and it was a QQQ play. It was for $35 per contract, right? It went down to about 30. So I got in a little bit early, but I didn't panic. And I said that, my stop loss is going to be $25, right? I said, if it hits $25, I'm out of the position. I'll take all my contracts out and then so be it. And I was really like, and this is 5 minutes. 5 minutes went by and I'm sitting there telling my team, I don't really like the movement on this. I might just get out, right? I only gave it 5 minutes, and I'm just like, okay, well, I need a play to happen, otherwise, my contract is just going to get eaten up. So, not in the position, and then finally, you just start seeing this red candle, boom, right? So I'm like, all right, well, where's my price target? So I made this doji candle. I looked at this doji candle right here, and I said, okay, put this level in, and I'm going to see how this plays out because this is basically where that for me is like a magnet level where price can come down to if you're playing the opposite way. All right. So when this candle came back, closed and came back up here to close, I got out at 30%. First contracts, I got out at 30%. Now, when you have multiple contracts, you should scale out, right? The more you scale out, is better because you don't know where your play can end up going. And so you could leave 1 or 2 runners and see how it goes, right? I'm not saying that there are, it's going to go to 500%. It can, right? And if you're holding on to one more contract, but you've made enough profit where you are satisfied, then go ahead, right? And if that's what these other traders do, then okay. Anyways, so as soon as this play got here, I'm like, all right, let's take a little bit off the table. This candle right here was the most important candle. The moment it hit the top of the doji, we scaled out, right? So we scaled out about $50. I believe it was $50. So from $35 to $50, we made $15 per contract, right, at that time. Now, the moment it came down here, I said, okay, if it hits the bottom of this wick, I will get out, I'll take out more positions, right? I'm like, this is a great play. Let me, I'm going to take it out. So it hit this level and it was only at 53. I still took it. And then the following candle right here, as this was like at the bottom, I'm like, oh, they're not surpassing this level right here. I don't know if I want to stay in this position. Let me just, I'm gonna take one. I had 2 more contracts left, so I say, okay, I'm gonna take one contract out. So I took it out, and it was like $60. So it was still a fantastic. Sorry, it's 57. I think it was a 60% play. I have to look at the things. All right. Anyways, yeah. So I got out the plate, so I only have one more contract, right? So I'm already exited all my contracts except one. And I was like, all right, I'm going to see how this goes, right? And I'm going to put a sell order because I didn't have time to look at the market. I'm going to put a sell order for $110, $100, and I'm going to put a that's a limit sell, and then I'm going to put a take a loss at $25. So TOS lets you do these kind of brackets for people that didn't know. So as this price action was going, this play was still around 50, 60, 62, 63. It was just hovering there, right? So it was getting close to that 100%. I wanted 100%. Oh, I wanted that 100%. It just didn't happen. Anyways, so during this entire movement, I said, okay, I'm going to get into a call position. It's a lotto play. 359 calls for $25. All right, that was a lotto play. So this lotto play right here, show you this. The moment I got in was like right around this section right here, and the moment I got in, it popped up to $30 per contract, which is $5 per contract. So I scaled out. I said, okay, I'm taking some of this off, and I'm only going to have a few left, right? And I did that on purpose because I want to make sure that even though it's a lotto play, I still want to take profit, when it's given the chance, because I feel like it could still come down. So anyways, it came down, it was like around 18, I guess, 15, 16. I didn't do nothing. And same concept. So I was like, I told my team, I'm going to put a sell order for $40. Right? I'm okay with that. I put a sell order for $40. Little did I know that I actually didn't put it for $40. I put it for $140. All right. So mind you, right? I put it for $140. I didn't know. I thought it was $40. So I come back and I pop up the phone and I'm like, oh shit, this is at $70. Oh, okay. Sold. It was a great play. $35 to $70. It was a fantastic, sorry, $25 to $70. It was a fantastic play. That's 180%. It was fantastic. And then I said, I was like, I didn't look at the chart. And then I'm like, maybe I should have looked at the chart. And I'm already out of my contracts, all of them, the remaining contracts. I didn't even leave a runner on my lotto play. I just got out because I saw 180%. I was like, oh shit, yeah, nice. I only wanted 40. Wait, why was it at 40? Then I looked at it, it was 140. So my bad. Anyways, so it hit, so I got out at 70, and I said to the team, I'm like, I'm like, watch this hit $140. Like, watch it just hit. That's my luck because it happens a lot to me. It happens all the time. I'll put a sell order for like a certain amount that I really wanted at, and then I cancel it because I'm like, what if it doesn't hit that? You know what? Let me just take my profits, right? And then it does hit, right? So same thing happened. I put it for $140, and boop, 15 minutes later, I hit $140 on this move right here. At that time, when I took out the profits, was right in this level right here, right? And then it just took off. It took off. Oh my God, it took off. And when it took off, like I said, that contract right here, it went to like $140, and it probably went a little bit more. But I saw that 140. I put out the team. I'm like, hey, this pay went to $140, and I'm like, yeah, just like that, silence, right? Because you're just like, man, paper handed again. Because I didn't look at the chart. Now, if I would have looked at the chart, I still probably would have gotten out, right? So me, I always pay attention to the 5-minute candles, right? And then this red candle right here, I would have got freaked out. And I'm like, you know what? They're going to probably drop it. Because I felt like they were going to hit the high of the day. And then, I was just like, I don't know if we're going to try to take out the previous day high. I'm like, we can potentially take out the previous day high. And I'm like thinking about Monday's high, and I'm like, I don't know, maybe Tuesday's high. I'm like, you know what? I'm not gonna risk, like I wouldn't risk it. And I would just take the profits. And then right after that, obviously, it would kind of pump up. But when I see that red candle, what happens to me is that, and it happens quite a bit to me, unfortunately. So when I look at that red candle, it just gives you that, okay, are buyers exhausted up here? Right? Because it's a red candle. So if buyers are exhausted right here. And if they are exhausted right here, it's going to probably drop. Kind of just same kind of concept that happened over here. But we were in an uptrend. There was really no reason for me to sell if I would have even looked at the contract. So that's how iPaper handed today on a lotto call from $25, made great profit. Bad boy went to $140. You know how many contracts I have for the remaining contracts? 5. So I have 5 left. I still made great profits. And I'm like, I could have made a lot more. We all think about that. We could have made a lot more. Just like yesterday. The puts, perfect entry on the puts. Right? Not the first one. The second was a perfect entry on the puts, right? So I'm just going to go back into this and I'll kind of show you why I got into the put position yesterday and what made me get into it, right? So this is yesterday. So the market opened and we just instantly pumped, right? We instantly pumped. We actually took out the pre-market high. This candle right here gave me a tweezer top bottom, tweezer tops, right? And I'm like, resistance. Is this going to be a resistance? And I look back and I said, okay, this has a hard time sometimes right here, right? So what I did is like I waited for this red candle to go below this green candle, right? Because that for me is a break of structure, right? It's going to change, right? And this can, if it falls below, we can probably see the low of the day. We did see the low of the day. Right. And I said that on the thing. I'm like, I just want to see the low of the day. We got the low of the day, got out with some decent profits. And then obviously I didn't wait. I just felt like, they might pop it back up and poop. And I was just like, oh my goodness. Oh my goodness. And I'm not the type of person that chases. If I miss a play, I miss a play. Right. A lot of people will have FOMO. Oh my God. I got to get in. No. If you already missed it, wait for another opportunity. If there's no more opportunities, oh well, because you don't know what will happen, right? You're going to chase a play. And then by that time when you're chasing, it's going to take a little while sometimes for it to actually generate. And that's when your data, your contract starts changing, right? So from certain time frames to certain time frames, kind of like I mentioned on Monday, is that your contracts depreciate over time, right? And so understanding that. So now it had that beautiful drop, and I'm like, oh my goodness. And it came back up right here. And I felt like, okay, I want to get into a put position. I told B Finger, and I'm like, hey, I want to get into a put position. And I didn't. And it just went boop. I'm like, again, right? And I just hesitated. As a trader, yes, I can hesitate. I hesitate sometimes because I'm like, okay, well, maybe they're going to give a dead cat bounce, right? Maybe it's going to have a rebound because it's already in an oversold territory because the market itself is around under 20, which basically means that big money usually buys. So that is called the MMFI. That's a market in general that is over the 50-day moving average. So right now, about 20% or lower is above the 50% average, right? And so that is where people start buying, right? You talk about big money. Now they're not going to just buy for like this week or next week. They're going further out. And even regardless of this whole situation that we're having, like we're dropping this and that, and we don't have a House Speaker, and we know whatever the news is bringing, right? This is the part where they want to install fear, right? Why? Because they want to get your shares, if you have shares, at a cheaper price. Obviously, right? You're selling, it's going down. Now they're going to get in, and it's a cheaper price for them, right? Opposed to them paying, like, think about this, right? So you had Apple, it was like around 179 a couple days ago. And you think big money is going to buy at 179? No. Right? They're like, no, we're going to wait for a pullback. We're going to wait for it to drop even more. And now got down to the 160s or the 170s, like low 170s, 160s. And they're thinking, okay, they're not thinking, they might add a few here and there, right? But they're not going to buy at the top. They're going to buy as it's coming down because fear starts kicking in and people start panicking, right? And the same concept. So right here, what happens is that people start panicking to get into puts because they're like, you're going to miss it, right? You're going to miss that bigger movement instead of waiting for that pullback, right? Waiting to see, okay, well, how did I know that this area right here can consolidate? Well, basically you can see that it was just chopping, right? And so when you know that it's just chopping within a certain range, it's probably going to make a move. It's not going to make a bigger move until a little bit later. And that generally happens like around 1 o'clock, right? Eastern time. And that's when a bigger move ends up happening. And that's what happened. And it just kind of just kept tanking. And then it finally kind of rebounded and whatnot, right? So understanding that, this entire section right here, I could have got into the play. I didn't. It was what it was. I did call out some lottos though. That was 5. Anyways, I don't want to talk about the lottos. All right, so let's go to SPY. All right, we're gonna put up this chart. Now, remember I said on Monday, I want you guys to pay attention to these levels. I want you to see how it interacts for the next 2 days. All right, we're not going to add anything else. We're just going to take a look at it. All right, this is it. All right, so Monday, we made our chart, and I want you to see how it played out so beautifully of each price target, right? So think about this. Price target number 1, right? Market open at 9:30. Where did it open? At the level that I made for you guys on Monday, right? This is Monday's level. We just put it in here. Where did it go to the next price target? It did not go above the next, the top of the price target, and then just went down to the first one, and then went down to the second one. And right here, I'm just going to zoom in right here because a lot of people just don't know that. Like, this is price action, right? So rejection right at that level, pop down. Look at this rejection right at the price action level. Look at the support that the price action tried to gain. Then look at how it kind of failed, trying to come back in, right? And just wavering. And then where did price action go? Stop. Look at how it stopped right at that level. Look at where the wick came out. Look at the rejections at that exact level, right? Price came back down, hovered the same place for 2090 or 2087 area. Then what did it do? Pop back up. First target, price target, price target. Look how it plays out, right? This is what you should do, right? This is what you should look at. I didn't add anything extra to this. And if some of you that, probably didn't, listen on Monday or didn't join us on Monday, you guys could go back and just look at the SPY part. Maybe we can do a video analysis later on and just do like a quick short of, the SPY from Monday with the chart and then what today was. I mean, from, the end of today. And look how it just played out. Every price action was important, right? Same thing back. Okay. It held here at this price action, right? It held here and then it rejected, went down to the second one. Look at how the bodies are closing on the price target. Look at the rejection again at the price target. Look at when it came back up, each level where it came back. Look where it stopped. Look at where exactly price action stopped. It did not go above. You didn't see any candles go above for the next type up, which would have been 426.20, right? It's just stayed within this price action. So when you're getting into a call position or when you get into a put position, right, this is how you can maneuver the play that you want to be in, right? So you're looking at, okay, if it gets to this level, which, it's getting to this level, then I'm going to go ahead and take some profits off the table. Why? Because sometimes it just chops in that range for a little while, right? So you could kind of predict it. Okay, well, hey, it's coming back down. All right, let me get in. I know that the next price action is down here. Now, this is about a 40-cent movement, 30-cent movement. So be it. It's a 50-cent movement. That's half of your delta. This was a 50-cent movement, right? Just from here to here. And then coming back, imagine you getting into a call position. Now you hit your first price target. Okay, let's see how this goes. I'm going to scale out. it goes right here. You're like, okay, it's still looking good. It goes to my second price action. Maybe I'll scale that right here as this candle comes down and kind of supports it, and because it got rejected at the top of the two, right? And then you're like, okay, I see how it goes. And then obviously I probably would have been out right here. And then you get that bounce back up and exact next price action. So you would have got in, right? Even at this price action at 422.77, right? And you could have held it realistically as each price action is going, because there was no rejection coming back down because your entry was pretty solid from here. You don't need to enter. You don't need to call the bottom. A lot of traders or a lot of people want to call the bottom. There's no reason to call the bottom. You don't need to call the bottom. You need to figure out where the trend is going, right? And this was a positive trend. And so with this trend going back up, right, you now look at your price action and where it's at. Like I said, this was from Monday, nothing added, nothing changed. 5 minute, right, and then same concept. So the next the next live stream that we do, we'll keep this same thing in. Whether it goes back down, or goes back up, and just fluidly how it responds. And that's where your price action is. Like I said, it's basically where you find that that support level at, and where it just bounces the pivot levels. And so once you find your pivot levels, you just mark that in. But it's not rocket science to do this, right? People make it so much, like crazy, right? So like crazy. Oh yeah, there's going to be a Head and Shoulders. There's going to be a Triple Witch. There's going to be a Adam and Eve, or Abandoned Baby, or Evening Star, oh Morning Star. Oh, all these technical analysis for what? Price action. It does everything for you. You don't need to look for patterns. You need to see where price action can relatively go to. That's why, knock on wood, majority of my plays are positive, because I wait for that special breakout, and boom, I know that I'm going to make at least 15, 20, 25, 30% profits, and I'm in and out, and I'm in and out. Because I'm trying to make my money, and I'm trying to make my money quick, right? So I work too. And so as I'm working, I live stream sometimes, and I give out plays, right? I find a little bit of time, and I'm like, you know what? It's break time or it's lunchtime. Let me see what the market is doing. And I always find a way to play a trade as long as it makes sense. As long as I look at the price, even in the chop, I will still make a play, because I know where price action subjectively can go to. And if it fails my price action, I know when to get out. But now I won't alert. I never alert plays that are very risky. So when I get into a play, and it's for entertainment purposes. Obviously, I'm not a financial advisor, and it's up to and I say this is what I'm doing. I don't tell people like, hey, get into this play. No, this is what I'm doing. I'm getting into this play. And so when I get into this play, I do full transparency. I get out at this. If I'm negative, I'm negative, right? I give full transparency. But if I'm going to tell people that, hey, this is a play that I'm going to get into, I have to make sure that it's not as risky. Why? Because some people might want to be like, oh, you know what? Like I might want to try this. They might not do the exact same play as you, but I might want to try this because, he's seeing something, and I want to see if he sees what I see, what he sees. Right. Anyways, so yeah. And that's what it is, right? It's just that price action. So when I'm when I'm in a play and I feel like, okay, price action is, relatively just going to be chopping, I don't get into that trade. I won't tell people about that trade. And now the moment that it starts breaking, I know that my next price target where they are at. And that's just it. Like, it's not rocket science. Don't let people out there make you think like it's a rocket science. Island tops, bear gaps, bull gaps, they're all there. You see it on Twitter all the time, or X, sorry. You see it on X all the time. They want to talk about the technical analysis, like the big terms, like, oh yeah. No, make it easy, make it simple. Simple is better. It's not hard. People are just trying to make it hard for no reason. Pause. So yeah, that's just the chart. And now Back to the show. So, real question to you, and for the ones that are in here, and if you want to respond, or if you want to just chat, the real question is, why are you in the market? That's a real question. Why are you in the market? Why are you specifically trading options? Why? Why are you? And everybody's like, oh, to make money. Okay. But 90% of the traders lose money. So what money are you making? Are you really here to make money? Because, like I said, 90% of the traders end up losing money. Or are you here to be like, okay, I want to learn about the market, and I want to learn about where price can go to subjectively, what happens when certain news comes out, it's just that learning process, right? Yes, I want to make my money, but I want to learn. I want to understand. And I want to be mentally prepared if I do get into a play, why I want it, because it's fascinating. To me, it's fascinating. When I got into trading, it was after the whole, way after the whole COVID situation. And it's just like, I was puzzled by it, right? I was very puzzled by it. And yeah, I made some money because I followed Matt at that time on some of his plays, and I was able to make some money. But I was just like, you know what? Like, I need to know what I'm doing, why I'm doing certain things, and so I studied my ass off. All right, I looked at, I went through so many different YouTubes. I didn't do. There's only one boot camp that I did, and that was with Maple, and fantastic with Spike Guy. I did a really good boot camp with them, and it made me just understand, okay, just the most basics: support, resistance, supply, demand, price action. And that was where my mind went to, straight to that price action. And then I started being, okay, let me get more advanced. Let me see what else I can learn, right? Then I started learning about the orb levels, and I started learning about the fib levels, and I started learning about just different parts of the price. I don't care about patterns. I don't look at patterns. I don't care about patterns. I don't care if there's a head and shoulders forming, right? I don't care about that. I care about what the price is doing at that moment. I don't care if I'm getting into an option play at that for that day, or for that, just that swing for the next 2 days. I don't care what happens 10 days later or 15 days later. No, I'm in this play right now. I need to know if this makes sense. Why am I playing an option play? Does it make sense? It's not easy, but it's relatively easy, if that makes sense. Right? And so really understand that, really dive into that. And it's not, like I said, it's not about, oh, I want to have 1,000 followers and subscribers, and my Twitter X account has like 30,000 and I'm in Finway. No, I don't give a shit about that. I want people to learn, because it's difficult to trade in this market. So just like, I'm reading one of the chats, and it's true, obviously the money, but money is just a product of what happens when you learn the skill itself. Exactly. Money will come to you once you learn the skill. It's just like basketball, football. Do you think you're going to, because you all of a sudden want to get into the sport and you want to get into the NFL or NBA, do you think it's that easy? No. What do? They're there to what? Make money. But they're there, the best of the best, like Kobe Bryant was there to learn, right? To understand the fundamentals of the basketball game or the football game, and to say, okay, if I throw it here, if this route comes here, if this is there, if a defender is there, and if I make that throw, does it, am I going to get intercepted, or am I going to, or my receiver is going to catch it? Right. And that's a process that they have to learn, but they want to learn. Yes, they want to make money, but they want to learn. right? They're learning consistently. New plays are coming, right? They're not playing the same exact way every single game. No, they watch films, they study. They study about their opponents. And that's just like the market. You have to study about the opponents. You have to study about what it can do and what it can't do. And once you get that, that is where you start understanding the market and you actually enjoy trading. And it's not going to be it's going to be like a hobby. And that's what it is for me. It's a hobby. And I love it. I love coming on and I love talking to people and I love telling people, okay, I get mad at people when I'm doing live stream and somebody gets into a play and I don't like it. I get mad. I'm like, why did you get into that play? Oh, because, I FOMO. Why? Why? That's the biggest question. Why? And, I'm quick to be like, don't, that was a stupid play. Because somebody has to tell you. I'm not here to tell you, oh, you could make $20,000, $30,000, and we're going to get this $1,000 account to $10,000. Stop it. Just stop. Exactly. Just like you said right now, watching the stock price, candlesticks, and the option contracts in conjunction. And that's what it is. Once you learn it and you understand it, it's a whole lot different. It gets so much easier to play the game because that's what it is. You're playing the game. But you have to understand how to play the game. You don't just get into things just because everybody else is getting to. Stop that shit. Stop it. Stop getting into put positions for SPY right now at 400. You're like, okay, I'm going to get into a $400 put because X, Y, and Z told me to get, like they're getting into a put for, October 20th, and they're going to think that it's going to 390. You know that we just dropped from 460 all the way down to 420. The market right now is in oversold territory. We hit that main target on the if we want to look at the EMAs and all that, it hit the 200. It bounces off of it. Yes, it could go a little bit lower, but why would you risk spending that kind of bread on that kind of play where you could have done that a long time ago? You could have done it with that 450. And people are so late to the game. Why? Because they follow other people. But if you would have understood everything that the price action is on a daily basis, weekly basis, whatever, you can tell that, hey, this is an opportunity for me to get into a short position because I can see that the play can go down. And that's it. That's all it is. And once you understand that, it helps you know. So sometimes I do swing plays. Sometimes I'm really early, but I make up my profits. Oh, and I'll tell you about the XLU. I added those contracts on Tuesday for like $20, $21. And then yesterday it went even. So my average went from 50 to 32 or 35 or whatever. And I sold some at 38. And I still have some. But why did I sell some at 38? Because I was like, you know what? I'm taking some of my investment out just in case if this decides to go down further, right? Even though this pays for January, but it's that kind of things, right? Just understanding that, okay, well, because it's still oversold, just because it can still go down, that doesn't mean that, okay, we can't get into a play. Best time to get into a play realistically is when the trend changes. That's the best time, not to call the bottom. That's the best time to honestly. And I'll mess up sometimes. I'll get into a play and I'll be like, oh, this is it. This is the bottom. I try to call the bottom sometimes. I'm a human. Oh, I'm human. I'll once in a while I'll be like, all right, this is a bottom. No, it's not the bottom. Because like in my mind, I'm like, you know what, this could go to 57. Oh, this could go to 50. This could, like you start thinking, right? If it goes here, I got to get out of the position because it could go further down. But once it gets back up to 58, 59, then I could get back in, but I could get a different strike. Those are the things I want you to think about. But yeah, if you guys don't have any questions, sorry for it's quick. Yeah, don't. I want to be. You know what? Like, it's like I said. Like, there's gonna be a little rally. You got earnings coming up. You got earnings coming up. You think, based on the history of when earnings happen, you think that the market is just gonna right before earnings comes out? Come on. Right? It's going to pump up a little bit at least. you'll probably see SPY go back into around the 430 area, maybe even 435 or 40. You never like in this within this month. But I did still say that we're going to end green, right? I'm sticking to it. If I'm wrong, I'll say I'm wrong. So be it. And it's okay to be wrong. And that's how you learn. Yeah, so day scalping, but you know what? It's not easy for some people to day scalp, right? Because you have to look at the play, and those people that are in, working, and you want to get into a play. This is specifically for you. So if you are working and you want to get into a play, your very first thing is like, okay, depending on what platform you're using, there are ways to take profit at 40%, take a stop loss at 20%, and that's it. Walk away if you're able to do that. If not, the same thing. Okay, if I have 2 contracts, I'm going to put one for sell at 20%, great, and I'm going to put another one at 50%. Okay, this because I'm comfortable with that. Now, if it goes down, you're not going to be able to watch it, obviously, because your platform might not allow you to do both directions. And so you could then be like, okay, well, hey, you know what? I'm going to take 2 contracts out. Yeah, I have 2 contracts at 20%. If it gets to 20%, I can sell, right? I could get an alert. I could get an alert on my phone. If it goes back, just the price action, just the price goes back down, and you could be like, all right, you know what? I'm just going to get out of the play. But don't get into the same day contracts. If you can't watch, you go to the weekly. So if it's Wednesday, you could go to Friday, or you could go to the following Friday. But you want to see if there's volume on your options before you get in. Are people buying them? Are people not buying them? Are people selling them? So once you are able to learn that and see that, it makes a difference, right? So if you're getting into a play and you're like, okay, I got into a TQQ call right now, like today. I got into a TQQ call. I got into a 30. I'm just gonna take a look at it. And I didn't say this alert out. And the reason being is that because just in case if the market decides to go further down, I don't want other people to be red. So I got into a TQQQ $38 call for next Friday at towards the bottom area of QQQ on the drop, right? So I got into, which was probably like right here, since the screen is up, QQQ. Now I look at QQQ, even though it's TQQQ. Why? Because it's a, it's a relative. It's that basically. So right here, I got into the TQQQ call, right? And right now it's up 24%. I haven't scaled out or I haven't done anything because I'm going to swing it, right? I'm going to take that little risk. Why? Because I'm hedging myself. So tomorrow, prime example, if the market kind of goes down, okay, like I could get into some put positions depending if it makes sense. And if I'm wrong, guess what? I have these calls that can make me my money. And you got to think about that logically, right? I'm going to take my contract is up 20% or 24%. I get into the opposite direction. My stop loss has to be like half or more, less than that. So if your play is up at 30%, that means that your stop loss should be minus 15% if you're playing the opposite direction. You never let that thing go down to the 30%, just like your other contract, because then you're not making any money. You're losing money, and you end up losing money at that point. So if you're going to the opposite direction, always make sure that it's half of whatever your contract is at right now. That doesn't mean that if your play's at 80% and your next one that you're getting into, you can go down minus 40%. No, pumpkin pie. Don't do that. Smack the crap out of you. Do that. 20% max. That's it. Unless you're getting into like a play that's like $25. Then you'd be like, I could take a 50% loss on this, or $20. I could take a 50% loss if it's a lotto play and if you've already made money. Anyways, since most of you guys don't have any questions, we're gonna wrap this up. I know it's been about 45 minutes, and some of you are like, I stayed on this for this long. Oh my goodness, Romeo, you just keep going on and on. All right. Anyways, yeah. So I will see you guys on Friday. Yeah, we'll see you on Friday, right before the weekend. No, 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 no. We're just doing Monday. Let's do it Monday because there's no point to talk about something on Friday when you have the weekend coming up, and it just doesn't make sense to me. So we'll do it on Monday, right? So Monday, I'll see you guys then. Take care.